Hello, everyone. Darren at Leviathan here with your morning report. As we are on the sofa trading floor, we'll focus on fixed income, and it's generally firmer this morning across the board. More of a bounce off the lows than any given trend change. As oil prices remain stable and not too much in the way of Iranian news, although there were reports from Axios stating that President Trump's team is now discussing options for military escalation to break the deadlock. And as is similar reports coming from saying that Israel's considering the same. Not that it seems to be scaring anyone too much at the moment, as the focus is more on the summit between Trump and Xi, but we'll come to that in a sec. Um, we had yesterday morning a way stronger than expected inflation number, the producer price index, and that's kind of shifted the chance of a hiking cycle to begin more so than it was before. And I think it was Oxford Economics outlined that after looking at the CPI and PPI, it now kind of pointing towards a 3.8% inflation year on year for the year, so up from last. But yeah, the main focus, as said, is going to be Trump and Xi, where they're going to discuss and come out with comments regarding trade, obviously, Taiwan and Iran. And that will be what dominates those negotiations. And we'll have a quick look at, I've got up here a couple of things. The SOFR volatility. What I have showing here, I've widened out the chart. This is a straddle price for the March 27, which has, if you bear with me a second, this is a constant maturity chart you'll see on the bottom left. And what that means is that it shows we have 303 days left of March, and this is looking at a 303-day straddle going all the way back. So it's a lot easier to do a comparison to say where is Vol now compared to where it's been in the past. And as you can see here, we had a trough in January in Vol and a spike up as the war started. Then a switch as we looked for maybe unchanged rates, but a creep back up again as we're going into the potential flip of a hiking cycle. But again, we've still got people avoiding trading short-term interest rates purely because it's people like it's a very predictable market. And with the inflationary headwinds combined with a new Fed governor whose mandate is to cut rates, this is no longer an easy to predict path. So people are rather trading something that they feel safer in predicting, which is basically been the equities. That's had a huge spike in volume. I am going to show you here. We had a look at Nvidia. Now, back in March, sorry, when was it? Now, I can look at it now, actually. This one here. So back in, the 11th of March, we were looking to target Nvidia. That was trading at the time 186, looking to grind higher to 225. The trade that we picked to look at was this ratio call flow 217.35, 255, getting in at $1.27 after costs. It's gone up. It's nicely sitting at $1.55. But we have to wait for that one to kick in a bit. It's made a little bit of money. Not as much as I'd have hoped, if I'm going to be honest, at this stage. But we are heading into the time when it could really start to kick in. So we're going to keep an eye on that. But I also wanted to have a look at a couple of other trades of a potential turnaround. Not that is where the trend is at the moment. But what if, it's not very realistic to say, well, okay, by June, could we retrace to where we were back in March? And of course we can. And there are some trades to put on. Our system likes buying ratio put spreads because obviously it must find some of the downside puts to be quite rich, which makes sense given the rally. So it likes buying 1x3 put spreads, 1x2 put spreads to get a decent return there. However, me personally, would suggest to you guys, unless you're a very seasoned trader or a hedge fund, you don't want to be buying ratio put spreads because the potential for that is unlimited downside. So these trades with these kind of returns are going to be more for the pros. So what I would do on our system, you can look at it premium only. So what you pay is what you can lose. Here you can see the returns do not diminish that much. You're still making 5x of your money. So the one it likes here is a 181, 194 put spread or bear spread, depending on which market you're looking at. You can get in at this puppy, $1.35. If you expect that turnaround to come within the next month, then this is a good trade to buy. The 181, 194 bear spread or put spread. It's relatively cheap as well. Going back a couple of years, it's in its 18th percentile, which again, similar to the way I looked at the Strata, we're looking at constant maturity, so same days to expiration, same percentage out the money options. What would they price that historically? It's cheaper at the moment than it has been. Currently you could probably get in after costs at around $1.30. We think that is a good purchase. So I'm going to add that one. It's not a trade that we are saying that we like. We think Nvidia is going down because the trend is clearly upwards. However, it is a trade that if you are afraid or if you think it's going down, this is a good one to do. I mean, chart-wise, it's kind of like just straight up nuclear. I still, think it could turn around. But again, this is all going to be dependent on the fact that Nvidia's chairman has accompanied Trump to this Chinese summit. And so you got to think that there's going to be something beneficial coming out of it for Nvidia. That does seem the likeliest outcome. Would explain why we've gone so nuclear in the stock. But as often happens, even if there is good news, buy the rumor, sell the fact is a often used saying in our business, and that could be the case here and worthy of having a little dip into a downside play just for a healthy pullback. Anyway, that's all I've got for you this morning. As always, better be lucky than be good. So good luck to you all and have a great day trading.